The market launches into the stratosphere. Will it ever come down? This is Invest with Jacob. Okay, guys, so in our last video a couple days ago, we were looking for a bounce, but I told you they might spike it down to 49.60 first, and then we'd look for a bounce and expect the bears to hold. But if the bulls pushed it through 50.38, we likely would see 5100, and that's exactly what happened. The market pushed it down to 49.60, then bounced, and the bulls were able to break through and took us to 51.10 at the close. Now the question is, will they ever come down? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, the market broke out on the NVIDIA catalyst. We were all over it. We had our hedges set up. We made money on those. We made money day trading. You can see on the screen that we exited at $1.22. We actually entered that position at 65 cents, so about a 90% winner on that one. And then on our main trade there, you can see that we have 3 hedges. Those paid for our put completely. Our put is further out in time. It is still worth $2, and it is 100% paid for. So the worst we can do is break even on that trade. We're currently up $2 on a short position when the market went up 100 points. This is called understanding trading, how to manage your positions, and understanding money. We do this all the time in my room. I have 2 short positions. One is 7 points wide for 93 cents several months out, and the other one is positive $2 and paid for, and the market has done nothing but go up. So how do we do that? You can find out in my room, and you're really missing out, and you're in there. If you're not in there, check out later in the video to find out how. But now let's jump into the chart and take a look. Okay, guys, so here we are on the 1-hour futures chart for the S&P 500. And we talked about this the other day. I said we could have bottomed here, but we might need to come down towards 49.60, which we did. They did that and then bounced, which is what we were looking for. And then that 50.38 area became very important. They pushed through that very quickly, actually, in the overnights. Opened up here and then took it the rest of the way higher into that 5100 area. We were talking about 5110 happened to be our 1236. That was a target we talked about in my room today several times as someplace we would expect the market to get to. We are looking at this as an expanded B wave. And the reason for that, there are several reasons for that. Number one, this move here up, if you're going to count this as a wave 3, okay, first you have to deal with this. This is an ABC. There's just no 2 ways about it. That's a 3-wave move up. Okay, and then the secondary part is if you're going to call this correction done here, then you're going to have to say that it's a flat, and there's no problem with that. A running flat is possible, but you really don't have 5 waves up here yet, and you don't really have what's called a 1-2 setup here on wave 3, and most of the time when the market moves up in a direct manner and ignores the 0.5, 0.618, and 0.764 extension without giving you a small pullback and then launching out, that is more indicative of how a C wave operates. And we would look at this as C of B. So you'd have your A wave down, up would be A of B, down would be B of B, and then up in C of B. So this does look more like a C wave than a wave 3 or even a wave 1. And I would be very hesitant to call it a wave 1 because it is very high for a wave 1. It's much too high, too fast. So if it's going to play out, I would expect it to play out more as a diagonal where the market went too far, too high, too far, too fast, as Elliott would say. Then you get a wave 2 pullback, and then your wave 3 isn't as big, and then you get kind of 4 and 5 that overlap, and then you'd come down from there. So I would not expect this to be a wave 1 unless it's going to play out as some weird diagonal. That wouldn't be an expectation at all. The move would be more that this is a wave 3, and in that case, you didn't get a 1, 2 of 3, which you would normally get. So this looks a lot more like an expanded B wave to me than it does a breakout for the bulls. And in that case, we'd be looking for a C wave down, which would be a pretty sharp decline. And we would expect that C wave to come back toward the target in the 48.50 area, back toward those Fed lows. Back here, 48.50 is our good support for that. We would expect it to be an expanded flat, and that's where we would target that move for the downside. So the pullback will kind of tell us a little bit. If we get a 5-wave pullback off of the high to set us up for that C wave down, then we can look more in a downside structure. So you get, your 5 waves down, a bounce, and then the breakdown in 3, 4, and 5 like this. If you don't get that kind of structure and it's corrective to the downside, then you're looking more at a potential 4-5 setup where they pull back in 4 and then back up in 5 for a little bit higher and then down. But if they are able to follow the Fibonacci pinball rules where they hit the 1, 2, 3, 6, now they need to really stay above 50.52. If they break below 50.52, 50.34 becomes the line in the sand below that, and it's very unlikely this is an impulsive move to the upside. So you would look for a corrective position that held in this pivot area, and then you'd look for higher if you're looking for a direct breakout and a continued bull path. But again, I do think this looks like an expanded B wave, and I would look for a potential 4-5. We don't really have a 4-5 at the top, so you might see something like this first, but I would be looking for a move down overall before much higher than we are right now. Over on the NASDAQ. So for the NASDAQ is very famous for deep retraces. We see it all the time. I still don't like this as any kind of impulsive breakout move, even though this is a pretty clean ABC down into our target area. This move up is not a clear 5-wave pattern. If you're counting it as a wave 1, it's already super extended to the 3618, which you would not expect out of a wave 1. You would expect wave 1 to come up, then wave 2, and then wave 3 to extend if you were going to see any kind of extension like that. So unexpected behavior if you're looking at this as a wave 1, which I would not be yet. They still have a lot of work to do if this is going to be a wave 1. And it's such a big structure already, I don't think that's going to be the case. I do think that we're looking more at a flat type structure on the NASDAQ where this is A, this is going to be B, and then you're going to see C down that still respects the lows from back at the Fed. And that would line up nicely with the ES path as well. Now, can they break out to the upside? Of course they can. Can they make a new high? Of course they can. All of that is possible. And we could see a new high in an expanded B wave where you get a 4 and then a 5 that kind of pokes up over the highs and then turns down. Something like that would not be shocking. But overall, I would not look for this to be the start of this wave 5 just yet. This wave 5 should target about 18.5, 18.6 overall, and this is targeting much higher than that as it stands. So I would not expect this particular wave to be wave 1, and there's no real wave 3 opportunity for it. So as of right now, I'm looking at it as a B wave where you have A and B, and then you'd be looking at C down in a flat that kind of holds this area, and then we'd be looking to start this wave 5 higher. So a strong move from the bulls, but overall, I'm still not expecting a full-on breakout to the upside. They can push a little bit higher in a 4-5 type move, but I would expect them to be contained slightly above the highs and then look to push down from there. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you right over to the webpage. Once you're there, check out our membership plan area. We have 2 incredible monthly plans. They both come with a 7-day free trial. Because I want you to get in there, I want you to make sure you love it. I want you to become part of the trading team, get in the group, understand what we do, make sure it's for you before you ever spend a penny. You can cancel at any time. You literally have nothing to lose by checking it out, and you can see exactly what we're doing and how we're trading this stuff and making money, even when the market goes against us. When the market goes in our direction, we make big sums of money, and when it goes against us, we still make money. So if you want to check that out, we give you that 7-day free trial. You're missing out by not getting in there. We also have some awesome learning material. We're just about done with our Advanced Elliott Wave course. All of my room members, my monthly members, get access to this immediately for free, okay? This is advanced fib levels, diagonals, double, triple threes, flats, everything you want to know about the more complex structures in the market and how they work so that when you can't figure it out, this can help you understand what you're looking at. You can see on the screen, people are loving this information. I put a lot of work into this to make sure it's very good and make sure it's detailed so that you can figure out what the market's doing before the market knows what it's going to do. Now, if this is a little bit much for you, we also have our Elliott Wave for Beginners online course. It is complete, and you can get it right now for $67. Or if you become a monthly member, you also get that one for free as soon as you become a member. This course is helping real traders make real money and finally understand the market in a way that makes sense. If you're watching good news and the market goes down, or you're watching bad news and the market goes up, it can be very confusing, and that's because the news cycles don't matter. Elliott knew this a long time ago, and he understood that key levels are what matters. Just like I said when we broke 50.38, the most likely path at that point was 5100, and that's exactly what we saw. We knew what to look for when 50.38 broke, and we knew what to look for if 50.38 held. These key levels are incredibly important to understand how the market works. This course gives you access to those levels on how to find them, how to measure the waves, how to figure it out so you can make sense of an irrational market. The course itself is 25 videos in 3 parts where I go over the introduction. We got to go over your mindset and emotion, the KISS method, why it works, all that kind of stuff. The chart setup and tools, every tool you need to use with Elliott Wave, okay, how to use it and why, as well as the Elliott Wave for Beginners area where we go through each of the waves, how they work, how to measure them, how to understand them, what their key levels are so you know what happens when they break and hold, as well as the theory of alternation, the corrective depth theory, the pivot, everything you want to know to get started on the market so that you can make sense of it. The cool thing is if you don't want to pay the $67, as I said, all of our training material is free in our monthly rooms. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video. Today's midday video, guys, was 38 minutes long. I went through NVIDIA. I went through what's going on in the market. We went through the trade, how trading works, psychology. There's so much that goes on in that midday video. It is worth the price of admission, and you get it every single day. And actually, today you got 2, because if I don't have a YouTube video, my members get a morning live video as well. That midday video, you get all your questions answered. You also get all of the training material you just saw. It is an incredible value. We trade the SPY and the QQQ, and we swing in day trade, so we do trade quite often in my room. And if you're looking for futures trading, individual stocks, income trading, and advanced training, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, futures trading, his income trading method. If you've been watching my videos, you know he's just killing it with that, as well as his reduced risk binary method, where he gets you in at a cheap price and get you big multiples on your money, and it's how he structures that trade that's so unique. Something you kind of have to see to understand. That's another reason for the 7-day free trial. He also started a challenge account where he put $4,000 into an account, trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we would love to have you in these rooms so we can all make money together. All right, the key takeaways for today. We're still looking at this move up as corrective overall. I detailed that earlier in the video. We would look at this as a B wave. If the bulls can hold over 50.34 and continue higher to fill out a 5-wave pattern, then we can start talking about it being the overall 5th wave. But until that point, I consider this a B wave and would look for a sharp sell-off at some point, whether we get a quick 4 or 5 for a slightly higher high here and then down, or directly down from where we are. Over on the NASDAQ, same type of situation where I do consider this to be a B wave, even though it was very strong and very hard move up today. It doesn't fit the impulsive pattern overall, and it's too big to be a wave 1. Everything must fit. That's in the advanced training. It's too big to be a wave 1 from here, so I would be looking at this as a potential B wave. It's already very stretched to the 3618, which is not common for a wave 1. So I would not be looking at this as impulsive just yet. I want to see more information from the NASDAQ. Guys, it's the weekend. Grab yourself a drink, get out of the house, go enjoy your family, and I will talk to you next week.